Hey guys, John Polemy here, Actionable Intelligence. Today is Sunday, July 22nd, and the title of today's video is Smart Money Moving Strongly into Uranium. And the subscript, kind of have a smart aleck subscript here. They are not buying in because uranium is going down in price. I've been getting a lot of hand-wringing, a lot of people that are really getting nervous about the uranium market. And so in the last week or so, after the YellowCake IPO that was oversubscribed, I decided to search around, and because I had saw some things on Twitter referring to some other investment vehicles that were coming to market that were going to be focused on uranium investing. And I thought that searching around the internet and doing some sleuthing to try to find out what was going on. So having said that, based on the YellowCake success, I think if people don't understand yet, they should. Big money, smart money recognizes the supply-demand imbalance that's developed or is developing in uranium. That's why the YellowCake IPO was oversubscribed. I mean, people need to remember something. Big institutional money that has billions of dollars can't go out and buy, you know, Sky Harbor Resources or, you know, Fission Uranium. They just cannot get enough money into one of those positions that it will actually matter to their fund without moving the stock price up massively. So a lot of punters out there, some of the bleacher bums, don't seem to understand that. You got to think like a professional money manager. So what we're seeing now is vehicles being created such that larger sums of money can move in and get positioned. It won't necessarily be in these junior stocks that a lot of the retail is holding. So you'll see more and more situations, I think, like the YellowCake thing. I mean, you could come in there and get $20–30 million of that if you wanted to, if you had that kind of money, without really moving anything, without really causing a big upset in the market. So one of the things that was a news item when YellowCake IPO'd and the news came out was a company that took a 15% stake in it. It was called Uranium Royalty Corp. Now, if you search on the internet for Uranium Royalty Corp, you will find a one-page website that has Phil Williams' contact information on him. Please, bleacher bums and punters, don't call this guy and email him asking him what's going on. Okay, he doesn't want to talk to retail investors, so don't do that. What Uranium Royalty seems to be, though, is a vehicle that's being created to take advantage of the future upswing in uranium. It's going to allow moneyed interests, funds, wealthy individuals to take a large position in the uranium market without upsetting the market. So who is Uranium Royalty Corp? Well, I wrote an article on my blog yesterday. You can go, here's the link here, I'll put it in the show notes, but you can go and check it out. Basically, here are the directors of the company. This tells you exactly what's going on, why I'm saying smart money's coming in, people that know what they're talking about. People are creating vehicles now so that institutional money can come into the uranium market. So you've got Scott Melby. Everybody that's in uranium should know who this guy is. He's an executive vice president at UEC. He's a former Cameco executive for 20 years. He was an advisor to Kazatomprom. I mean, this guy has been in the uranium business for about 30 years. That's one guy. You have another guy here, Darren Melmeister, used to be a former director of U308 Corp. Mike Harrison, who's a director of Sprott Resource Holdings. Sprott Resource Holdings is a vehicle that buys undervalued resource sectors and then waits for them to become fully valued and then sells them. It had not done well in the last few years because of the bear market, but I like to see the Sprott name around these things because they are definitely can raise money. And then Phil Williams, who apparently has had multiple roles in business development around the and around various resource deals. If you do searches of these guys on LinkedIn or on Bloomberg, they come up with multiple resource deals, multiple successful deals. So these are plugged in people that have quietly been putting together this vehicle in order to, I believe, bring it public here in the next few months to really provide a necessary way for institutional and big money to come into the uranium market. What's interesting is if you go back to the third quarter 10Q of UEC, you will see, I believe it's in note 7, you will see that UEC bought into the original private placement that took place with Uranium Royalty back in October of 2017. Back then, Uranium Royalty raised about close to $700,000, and UEC took a big chunk of that. What's interesting, based on my search and the CDAR publicly available documentation that's available online, Uranium Royalty just closed another private placement on 7/3 earlier this month and raised another $3.9 million. I'm not sure exactly what their plan is. I don't have any inside knowledge. I don't know any of these people. I've never talked to them. There's not that much information. But what I suspect is that they're preparing to bring this thing public. I think that they're probably talking to institutional money managers and hedge funds and private equity people, wealthy individuals that invest in the resource market, getting the story out. And I would suggest that people are going to come in and take down big chunks of this thing when they bring it public. If it's an actual royalty company, that would be good. I'm a big fan of uranium, and I'm also a big fan of royalty companies. Franco-Nevada, I made a lot of money on that over the years, and some of the Silver Wheaton, some of these other royalty companies that were focused on other facets of the resource sector. So one of the things I think that if they do raise a big chunk of cash, there are so many uranium juniors out there that are thirsty for cash right now. If royalty deals do develop, they could have a very big, large picking. The other guy I want to talk about is, everybody should know who this guy is, Mike Alkin. He's Curzio research guy, does newsletter, big newsletter writer, talks about uranium a lot, calls it the best asymmetric investment theme of his career. He used to be a hedge fund analyst, pretty down-to-earth guy. He's got a podcast that comes out every week called Talking Stocks Over Beer. I recommend you listen to it. It's very good. He's a prolific writer and speaker on the uranium investment case. And if you do a search, Mike Alkin Uranium, you will see that he has partnered with Lloyd Harbor Capital Management to create a vehicle called Shashim Cove Partners. It's going to be I suspect, a private equity vehicle or a partnership. It probably won't be available to retail investors, and I suspect that this is going to also appeal to larger institutional money. It says on their website that the uranium sector is on the cusp of a dramatic supply-demand imbalance whereby inadequate supplies will not be able to meet rising global nuclear power demand. We all know this. We all get it. I think what I'm trying to get across to you guys is don't get nervous. Right now, some of the uranium stocks are not performing that well. That's because URA, the ETF, is rebalancing. We did see Energy Fuels, for example, make a new high this week. The uranium spot price is slowly creeping up. Another catalyst coming down the line, in my view, will be the Cameco quarterly report. We'll be looking forward to see if they have any news on McArthur River, whether or not they plan on putting it into care and maintenance, and where they're at with buying their needed supply in the spot market. So I think this kind of money, these kind of people, they don't get involved in things because they think the uranium price is going down. They think the uranium price is going up. They see the opportunity, and they're creating these investment vehicles so that they can get institutional money into these things. Obviously, they get they get a percentage for running the funds and providing the vehicle. But I think it's indicative of what we're seeing and what we're going to continue to see. This is what you want to see, guys. You want to see big money come in. It's not going to be the retail punters and the bleacher bums that drive this thing higher. It's going to be the channeling of big money, people that get it and can put, you know, can write a check for 10, 20, 30, 40 million dollars. So just wanted to get this out there. I thought it was very interesting. I suspect we'll see more of this, and when we do, I'll report it. But that's it for this week. Short video. Welcome any questions or comments, and happy to engage in the comment section. Thanks a lot for listening. We'll talk to you soon.